Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Well, today, Thursday, March 20th, which is really the last day of the week because tomorrow being Good Friday, the markets are closed, ended the week on a very good note. And you guys know we've been in a strong camp for a rally, even after yesterday's retracement, which was sizable. Don't get me wrong. It was a big down day yesterday, but it was only a 0.618 Fibonacci retracement, which is a perfect retracement in the markets off that large move, ultimately leading to another bullish push today. And we still stand by it, guys. You guys know, those of you that were in the Sunday night chat, which is a free chat, we do every Sunday night, although this Sunday night being Easter, we will not have that. But every Sunday night we do that, and we did say that we expected it to be a positive week, and sure enough, it was a very nice positive week in the markets this week. Overall, the indexes were up a couple percent for the week, and it was a beautiful week. You know, there's nothing to say. The options X play was a perfect play, and I'm going to go into that in a minute here, but let's just go over the indexes. The Dow was up 261, 2%. The Nasdaq was up 48, a little over 2%, and the S&P was up 31, about 2.4%. So again, a very, very nice, strong end to the week, and now we're going into the weekend. The long three-day weekend. Monday is going to be an interesting day. All of next week is going to be an interesting day, and we do somewhat anticipate follow-through now. All right, and you guys, I think you guys are starting to sense what we've been sensing all along, how this market continues to just try to push up. Every time it pushes down now, you seem to get some sort of news or gyration back to the positive side, with ultimately the charts were telling us that was going on over the last couple weeks and to expect that. So last week we saw a flat week, even though we had a big rally and then a big pullback. This week we ended the week positively, and we'll see if we can build on that next week. Now let's get into the charts here, and I just want to talk to you guys a little bit about Options X and why this is such a unique understanding and why it's so important to understand options expiration. The movement Tuesday, Wednesday, and Thursday was almost ideal for what large institutions and money managers want. Ultimately, those guys are the ones that are selling the puts and calls to people going into Options X, and they want to whipsaw the little guy out of the market. They want them to get rid of their puts when the market spikes and buy calls, and then they drop it the next day. And that's exactly what happened. We had this huge up day on Tuesday, and then basically what you had was a ton of puts going into this week. And we all knew that. You know, we talked about the put-call ratio being an indicator. We talked about our proprietary analysis telling us there were tons of these short players out there. And the massive up move got everyone to say, you know what, I'm going to go long. I think we're going to rally. So you have a lot of these put players getting stopped out or going and switching into calls. And then Wednesday, you had a huge down day, a 0.618 retracement to be exact. Now, a lot of people out there on the down day yesterday said, you know what, I'm throwing in my calls now. Forget this. I'm either throwing them in and moving out of the calls, or I'm going to take puts again, because this market just can't stay up. But we noticed this 0.618 retracement. We noticed that it was, even though it was a sharp down move, it did not have the same characteristics of breaking the lows again. Ultimately, you had all those people getting rid of their calls yesterday, buying puts maybe, and then you have a big update today right into the end of Options X. So in any case, just quite something going on there. You can't go wrong in this market where it's just an unbelievable movement. Just continue to follow these videos and you'll get the technicals that are going to be the downside of this. All right, folks? So continue with that and you'll do fine. So now let's talk about the intraday market here. And you guys can see from the chart of the ES, and we use the 10-minute ES to go over the intraday moves. It's a beautiful chart pattern. And ultimately what you see all day is just a continued up move. You have small little patterns here and there, and we'll show you them. You have a little bit of a W pattern here, a nice little W that was able to be recognized early on with a little tail. Notice the tail was below the low, and this is what we always talk about as being the best W pattern, is when you have a tail that breaks the low, getting all the shorts to jump on board there, ultimately closing in a nice little bottoming tail and moving up. So you have that nice W pattern, you have the V pattern, and then off to the races up there. So you have a nice little pattern right there. And I want to show you this one thing here. Look at this. Where does the market come down on that V before the next blast off? So you have the W pattern, the little V. Notice where it's coming down. You have the 200 moving average right here and the 20 moving average. A beautiful necktie, and you don't need any more than that. When you're looking at a W pattern and you have a necktie, you know that's almost always, the percentages there are 90+%. I would say that's going to be where the market makes another move higher. Sure enough, it was late afternoon, or about 1 o'clock, early afternoon I should say, as the market blasted all the way into the close. It pulled back a tiny bit into the close. I think that's a little profit taking. Even in this market, remember guys, we are bullish, obviously, as we've mentioned, for the near term. But ultimately, and I really want to make this clear because I feel some people just take, oh, they're bullish, it's going to go up back to new highs. That's not what we're saying. We're saying in the near term we expect a bounce, and we've been right so far, and we do continue to have that kind of swing to the markets that we do expect over the next couple weeks to have an upside bias. But that's it. Ultimately, we are going to break down. There's going to be another shoe to drop, whether it's hedge funds, derivatives. There are so many issues out there in this market that most people are saying we're in the fifth inning or whatever of a baseball game here. We may even be earlier than that. So you're going to have another push down. Ultimately, you just have to get to the seventh inning before the market will turn around, though. Because the market always looks about 6 months in advance and says, all right, in 6 months we're going to clear all this junk out and we're going to be good, and that's where you bottom out. Once we can see 6 months in advance that it's done. All right, it doesn't mean the market won't be jittery and fluctuate like we've seen the last couple of weeks, because it will, but you'll ultimately make that bottom, and we are seeing that bottom in June-ish. We're thinking that the markets will bottom, and that can change, by the way. Don't lock us into that, because as the technicals change, everything can change. So again, you see some nice patterns here on the intraday. You see the necktie V right there before the blast off, and we're going to see what happens next week. Monday could be a quiet day. There's a possibility of a quiet day. By the way, today was very light volume. You had a little over 2 million contracts traded on the ES. Considering the volume we've done lately on the craziness, that's light volume, guys. That's extremely light volume. But we expected that. We mentioned that yesterday in the video, saying that the holiday, you're going to have a lot of volume in the morning, but by the afternoon, you're going to have quiet, as people take off early for the vacation, for the long weekend, you're going to have lightening up volume. And then always, you guys that have been following our videos for months, since when we used to be going up, you guys know light volume always favors the upside. So again, that's why we also anticipated a possible move up here or a flat move today. Now, one thing about this market, guys, a great move today, we got to see where it's setting up on the daily, and that's why I want to bring to the attention the ES on the daily here. And here's the daily, and you can see the beautiful double bottom here. You have the nice tweezer effect, which gave us the initial bounce up here. Then you had that trend, all right? You guys know we were in that trend for quite a while, where you're just trading sideways. Then you broke out of that trend, but look where we're coming to. All right, underneath. See, it's coinciding with the 20 moving average, but let me draw this line in again. If you draw from the lower ends of this point, all right, you see we're hitting on the upper areas of that trend, trying to bust back into that trend. Now, in a situation here, you could actually assume or guess that if we break above and we can establish ourselves above this trend, which is coinciding with the 20, you could have a possible move up into this area here. And I do ultimately think that's possible. We will, once we get up there, hit more resistance, though. That's going to be a near-term resistance line. You can just draw a double top line across, and when we get there, that'll be a triple top, and you'll have resistance. But ultimately, the downside risk is this point. We have to look for a break of this point down here. On the upside, you're looking for it to possibly get up to here, as we do favor the upside in the near term before the next shoe drops and this market breaks January lows and goes much lower. We won't get into the exact how low we think it's going to go yet. We'll get that as we break. Once we break January lows, we'll start looking at that. But again, that's weeks away. We do have a bullish bias right now. And as traders, you guys know also, we don't care. You give us a bull market, you give us a bear market. As long as it's trending and not this jumble up and down junk that we've been experiencing in Options X Week, and that's why we're so cautious on Options X Week, then we'll be able to trade it either way. We don't care which way it goes. We'll make money short or long. We just want to get the trend going here, and ultimately it looks like we've been kind of accumulating positions as we go here for a long move that we're expecting, and it looks like it's coming to fruition. Okay, so again, we see the ES, guys, and I'm showing you the ES daily. This is what we're looking for. We're possibly looking for a move up through the 20 here, and even through the 50. You're going to have a little resistance at the 50, maybe a little bit of a pause there. But ultimately, I think we could possibly see the upper end of this channel once we break back into this. And you guys could say, well, it looks like we're above it, but I really want to see 2 days, 3 days of trading above this area right here, above the channel line right here, to really establish ourselves in that channel. And then we can say, okay, well, then we're above that channel. We should go back to this high up here and make another test of that high. Now let's look at the NASDAQ, because the NASDAQ is a slightly different chart. There's no doubt about it. But one thing I do want to draw everyone's attention to is this line right here. All right, notice how we're taking the top there, the top here coincides with the little top there, all the way down here. If we can break above this line, and we are pretty close to it, we're hitting the 20 moving average again on the upside, we should make an easy move to the 50 moving average, and then we possibly pierce that and fall and stumble into some area of resistance right around that 50 moving average. On the downside, it all holds still, guys. You still got to figure, you have, let me draw this line in here. You still have the downside where you got to watch for 2 closes below this line. We had 1 close here. You guys know about confirmation at this point. We like to see two days below a breakdown line, or at least the second day continuing that breakdown, because too many times amateurs will get psyched out by a push down when they spike it the next day, just like it happened here. And you just gotta be aware of the market and the manipulation that goes on in this market. So ultimately, you had to close there, and then you didn't have another close till here, and you never got 2 consecutive closes. So this still, to me, is the breakdown area. We get below here, then you watch for a break of the low right down here, and if we take that out to the downside, it's, well, we'll go into that once we get there. All right, folks, so that's the basic analysis right here. You're looking for support right along here. You're looking for a breakout above this trend line right here, and that on the NASDAQ looks to be about 2280 or so, 2275. A close above that should yield the 50 moving average to the upside. All right, that's about it for now. Again, come join the Swing Trade Alerts. Come join the intraday stock chat and the ES. We trade the ES in there as well. You can sign up for that on the website. We're undergoing some great changes in the money. We're doing institutional stuff, big stuff on the horizon. So keep going to the website and checking out all the new products. We'll talk to you soon. Have a wonderful weekend, guys. Take care.